If you're here for the first time, subscribe to the channel and get news about crypto, politics and economics. But this video is only about crypto. So, if you're a newcomer to cryptocurrencies, you probably think that everything in crypto looks quite random. Many coins go up and down, and you don't understand what's happening at all. It seems like a casino where you have to bet on some random coin to rise. But don't worry, by the end of this video, you'll know what drives the cryptocurrency market, when it's better to invest actively, and when it's time to start locking in profits. Essentially, the cryptocurrency market moves from a bearish cycle to a bullish one. The bearish locomotive of this train that moves in circles is Bitcoin. Bitcoin always opens the way to a new season first. Why are cryptocurrencies cyclical? There's a good reason for that. Cryptocurrency is not chaotic at all. It is closely linked to the global economy. Moreover, the correlation between Bitcoin and the global money supply is 86%. The money supply grows and shrinks for various reasons, primarily influenced by central banks. This topic deserves a separate video, but today it's important for us to understand that the money supply changes its behavior every 4 years, from periods of tight central bank policy to periods of easing. During periods of tight policy, we face bearish markets because interest rates rise, loans become more expensive, the money supply contracts, and inflation starts to decrease. In such conditions, people do not want to invest, especially in risky assets, which cryptocurrencies are. By comparison, stocks, real estate, especially bonds, seem to investors to be less risky assets. However, keeping rates high for too long is dangerous for the economy. So after 2 years of tight policy, the authorities start to lower rates and raise inflation, which is currently happening worldwide. This leads to an increase in global money supply. This was discussed even back then, when the reversal of global monetary policy had not yet influenced the rise of cryptocurrency assets, and the influence of monetary policy reversal always occurs with a delay. The reversal of monetary policy is great news for cryptocurrency investors because risky assets are likely to start rising a few months after this, when all systems begin to receive cheap money. And the riskiest assets are, of course, cryptocurrencies. However, among cryptocurrencies, Bitcoin is considered the least risky asset. Why? Because it has the largest market capitalization, which allows it to be the most stable cryptocurrency on the market. If you disagree with this, that's fine, but look for yourself. Every time Bitcoin falls by 3-4%, altcoins fall by 10 to 20%. This is what I mean by the least risky among risky assets. As we approach the peak of the cycle, investors move from the least risky assets to riskier ones. That's why Bitcoin starts to rise first, while the least stable ones rise last. Bitcoin began to rise at the end of 2022 after the collapse of the FTX exchange. That's why many people are now in a small delusion, thinking that Bitcoin's rally started right here. In reality, it has been going on for over 2 years. By the way, crypto experts tell us about this and urge caution. If we know that Bitcoin moves first, then who follows it? Of course, it's the large altcoins. It's really important to understand this because if you understand how the market moves and why it moves that way, it will be much easier for you to know when to start locking in profits and when to do it. If we understand that the path to a new season starts with Bitcoin, the least risky asset, and then moves to riskier ones, such as large altcoins, then everything becomes logical. Large altcoins are much less volatile than altcoins with medium, and especially that's already a significant amount. But if we take a small altcoin with a market cap of only $1 million, then $10,000 will already be 1% of that. If someone suddenly sells these coins for $100,000, it will crash the price by 10% in one click. Now we begin to understand that Bitcoin rises first, then large altcoins like Cardano and others rise. They are all showing good growth right now. It's important to understand that large altcoins grow, but their growth usually slows down and smaller altcoins take the stage. Look at the last bull market. Here are two different examples. Cardano, a coin that existed in 2018, showed outstanding growth in the last bull market, but Cardano reached its peak at the end of August 2021. Such results in 2021 were shown by a large altcoin that already existed in 2018. The second example is Decentraland Mana, a new coin at that time, which started its bull market only 2 months after Cardano reached its peak. And literally, within a few weeks, Mana made an 8-fold increase after already showing decent growth. The same happened with Gala, the same happened with Sand, and other new coins of that cycle. They reached their historical peaks only in November of the same year, while large altcoins that had already existed in the previous cycle had reached their peaks in late summer. Remember this, it's very important. Large altcoins from previous bull markets usually show the most aggressive growth in the early stages of a new season. They reach their peaks earlier than new fresh coins. This is a key moment for us because many large altcoins that are currently actively growing are already approaching the moment when it's time to lock in profits, at least partially. They may continue to grow a bit, but their risk to reward ratio will be worse than that of smaller new altcoins. Why? Because large altcoins are less volatile than small ones. As explosive growth occurs, potential returns decrease sharply. By viewing the market as a path, you move from safer assets to riskier ones. That's why towards the end of the cycle, many investors, especially newcomers, start investing in complete rubbish, like meme coins or coins that no one has even heard of. For example, at the end of the last bull market, these were NFTs. Now everyone is talking about meme coins. It's quite possible that we will see a crazy season of meme coins at the end of this bull market. So should we sell large altcoins right now? No. Large altcoins still have growth potential, which is more guaranteed in the short term than that of small ones. Of course, we all have small altcoins, but many of them do not show the same movement as large ones, which are giving us confident 2 to 3 to 4x already now. This, by the way, tells us what phase of the market we are in. How do you determine the moment when it's time to start selling large altcoins and moving money into small ones? Just keep an eye on Bitcoin's dominance. We saw that Bitcoin's dominance started to decline at the end of 2020. At that time, we observed a sharp drop in dominance, and that's when the altcoin season began. Everything started with coins like Cardano, XRP, and other large altcoins. But that was long before anyone had heard of Gala, Sand, or Mana. These coins became some of the most explosive altcoins of this cycle. Pay attention to where Bitcoin's dominance was when Solana, Sand, and Mana started to actively rise in October 2021. When all these listed coins began their surge, Bitcoin's dominance had already dropped to 45%. There is a good chance that in this bull market, Bitcoin's dominance will fall even lower because there are now many more new altcoins and people in crypto are starting to become more aware of the opportunities they open up. In my opinion, this is a key indicator that will help me determine when to start locking in profits on large altcoins and move to smaller ones. In fact, it is an indicator of the market's transition from a relatively safe stage of the bullish cycle to a more reckless one, where people begin to make increasingly risky bets in hopes of grabbing at least a piece of this pie. So if it starts to rise, it means that people are moving from more reliable large altcoins to riskier medium and small ones. Now pay attention to this moment, December 28th, 2020. We see that this chart started to rise significantly. It was at this time that Bitcoin's dominance began to decrease sharply. But the most powerful push for smaller altcoins came from this second explosion. Others. We literally got 2 opportunities to lock in profits on large altcoins. Now I have zones of interest that we can break through. The first zone is right here. In this zone, I will lock in about 25% of my positions in large altcoins. Then we have another resistance zone and another one. On the way to this peak, I will partially lock in profits on large altcoins, here, here, and here. by the time Bitcoin's dominance, excluding the top 10, rises to 20 to 25%, I will lock in practically all profits on large altcoins. I will be sitting on cash with USDT, ready for the very culmination of the bull market. Before the most reckless and even absurd part, I will move money into small altcoins, new cryptocurrencies, new projects in the gaming industry, tokenization of real assets, artificial intelligence, and DeFi. I will also keep a cash reserve for future opportunities if the market starts to correct. This will be an excellent opportunity since Bitcoin has not yet reached its peak. Many indicators suggest this. For example, these two long-term Bitcoin holders often sell near market peaks, and interestingly, their largest sell-offs in 2017 and 2021 occurred just before the final growth phase. Perhaps we are now on the brink of a similar model. There are too many good news right now. Typically, at the final stage of the market, there is a huge influx of retail investors. This is the chart of Bitcoin coin activity that is less than 6 months old. That is, these are short-term holders. And we see that despite Bitcoin reaching its historic peak, there is still an absence of influx from retail investors. Notice how strongly retail investors entered Bitcoin at the peaks of past cycles. The spikes here, the spikes here, and the spikes here perfectly coincided with the peaks of those cycles. Right now, we are not observing such a spike, and this means that retail investors have not yet entered the market. My name is Alexander Lichak. Follow the plan that you need to develop for yourself.